Turnaround Tuesday, everybody. Hi, Shahab and Brock, Forex Gal. Everyone doing okay? Okay, so attempting turnaround Tuesday, scalp only counter trend in Euro. Buying it here, about a 40 pip stop. I'm not looking for a lot. Just a little tip, the best days, can you guys hear me okay? Best days to fade Euro weakness is when it's not as weak as cable. And the opposite is a good time to get short cables when it's not as strong. Short euro when it's not as strong as a pound. So Steve went over euro pound yesterday, and it's trying to dig its way out of this hole here. Thought there might be one more drive for a 3, but there doesn't have to be. So just a shot, no heavy commitment. Just looking for something to do. US dollar yen, just basically sideways. I still don't want to short it here. Oh gosh. I want to short it here. I would be waiting for something like 109.30, just like Blake was talking about yesterday. And maybe with the Fed, we get some type of rally up here. One more time to check the breakdown. Hey team, did you see the sticky note? So I was using a regular sticky note and taping it on my screen, but now everyone knows when it starts. So, um, oh God,
I saw it. It's nice. Good. Thank you, Dale.
what? Yeah, the sticky note.
Yeah, man.
Okay, all right.
Technology.
I'm telling you, man. I've been you guys dragged me kicking and screaming into the 21st century. Anyway, so nice little recovery in S&Ps and Nasdaq. I don't really want to do too much in front of the Fed. I know people are expecting nothing from the Fed, but I think there could be a bit more of a rally in here. There are guys that are still saying we're going to get one more new high. If I had a shot up around 32.90 or 33 this week, I'd take it, but not down here. Covered shorts in here, so flat. And really, that's about it. I'm going to stand by what I said, is that I don't think there's any big reversals in anything until, again, here's your 10-year. I mean, that's a nice little gap that we had yesterday. We left gaps in a lot of different markets. I don't know if they're going to be able to fill this, but again, 140, 135, I think, is coming in the 10-year. So we'll see if they try and rally into the gap instead of trying to play it to fill the gap. If they attempt it into the Fed, that would be a fade for me as well. So, any questions on anything that I've covered so far? I want you guys to stick around for our guest today, especially if you're a COT aficionado, because Leo Hormoso is going to be here, and he sent me a message, a DM on Twitter a month or so ago, that he's developed a new tool to help you with the commitment of traders reports. So looking forward to talking to Leo Hermoso at the top of the hour. How are you doing today? Is Blake here? I know that he's going to the Phoenix Open, caddying. I think he's going to caddy for Tiger Woods today, if Woods is even in it. Blake, are you here? I don't know. Well, then Steve is here.
I'm here. I'm here.
Oh,
I'm
oh,
here.
how are
I
you?
just good. I was just actually trying to push a chart out. Just give me
Oh,
one
okay, buddy.
second.
Yeah, it's all right. I didn't talk too long, which is pretty
No,
unusual.
I'm just
Just one more thing. I was looking for a third drive in gold, and I know Greg is taking a short, so I could see Greg's scenario working out from here too, especially if we're going to get more of a yen rally. Maybe what he's looking at is A or 1 and 2 or B and then 3 or C. We did fill the gap in the gold from yesterday. Well, yeah, it's filled. Okay.
We did. And, I'm kind of hoping right now that we get a gap fill in the dollar yen, which would take us to 109.20.
Well, yeah, you were talking that number yesterday.
Yeah, it looks doable here.
Yeah.
So here, I'll go ahead and take over.
Okay,
by the
bye.
way, I'm going to go to the Phoenix Open this morning. It's practice day. It is, and people that know me have been here for that have listened in for years on the Face webinar and the Morning Edge when I used to do that. I only go to the Open if I've got good tickets. If somebody's got some good tickets for me, I'll go. Other than that, I avoid that place like the plague. I have to drive by it all week long, and for 2 weeks following the Open. It's just, I drive by because my kid's school is right next door, and it's a disaster. I hate it. But if I've got good tickets, I'm gonna go. And so today's a practice round, and which is good. It's a light day, so there's not going to be big crowds there. But I'll be on the 16, and I get free food, free drinks. So
Fun.
and I'm going to be hanging out with some friends for a couple hours. So how can I pass that up, right?
Yeah.
Yeah.
Oh, you got to smell the roses, Blake.
What's that?
You got to smell the roses. You got to have fun.
Yeah, I mean, this is it's
you got to grind it out, looking at your screen for the next 80 years.
And I've been on the 16 many times over the years, and it's the stadium hole where the whole the whole thing is a stadium. But the problem I'll just, for those of you that are not golf fans, it's like one of the rowdiest golf tournaments on it is the rowdiest golf tournament on the PGA Tour, and so the tickets for like a booth, which is similar to like a box, like if you, and this was prices from 2 years ago, so today might be a little bit different, but it's roughly, depending on what box, it's roughly $50,000 to $70,000 for a box.
Wow. Yeah,
and that's for today all the way through Sunday. So each ticket is roughly $200-300 if you can get them. The problem is getting them, and it's not about it's only about who because most of the tickets are corporate tickets, and they're given to like, let's say Intel's got a presence here, so they'll give a bunch of tickets to people that are coming, they're VIPs coming in from out of state to come to the golf tournament, and they'll give them out to their people. So
it's a
like
party. It's a happening.
What?
It's a happening in Phoenix. It's one of the biggest happenings.
It's all about corporate relationships at this golf tournament. And so
I don't know. For me, it was all about chicks.
No, I'm just saying getting in and getting a ticket. I know. Some people very rarely will get their tickets from somebody, and then they'll turn around and try to sell them on Craigslist or something. And but most of the people, they're very coveted. You can go general admission and just kind of bebop and walk around. It's still fun, but I do not go unless I've got like the good seats. So because I've been too many times over the years, and it's gotten so big that it's a pain in my butt. It's more of a pain. But I'm going on a light day. I got free tickets. I'm gonna get free booze and food, and I'm gonna go out there for a couple hours with my wife and meet up with my friends, and it's great. So
have a good time, bro.
For the rest of the week. So that's enough about that. For those of you that most of you don't care, and that would be 90% of you. So let's talk about the markets.
What about Euro, Blake, down here? You have any support zones in here?
Well,
that
yeah,
you're
we're in
looking
the
at?
support zone right now. But remember, we're working a head and shoulder pattern. So this as I've been talking, this very long-term trend line comes back into play like right around here.
Wow. Okay.
Maybe probes below 110 can give you some support. I'll tell you, I've been buying Euro crosses, and I sold my Euro Canadian this morning, and I sold my Euro Aussie yesterday around these levels and did really well. I actually pretty much made my whole week in the Euro Aussie if I really wanted to stop for the week. But the euro dollar itself, I mean, we're coming into a lot of support here. So I would be a little hesitant about being aggressively short down here. We could, in my opinion, probably bounce towards like 110.60 before heading lower, that type of thing.
Okay.
I think that's like a realistic expectation where we're currently at. But like I said, I'm playing crosses. Matter of fact, I do own euros right now. Guess which euro I own right now?
Euro pound.
Nope. Anybody want to take a guess?
Euro Mex.
What euro cross I'm long? Forex Gal asked what my handicap is.
Blake's not handicapped.
Probably like realistically, because I stopped keeping my handicap like when I got rid of my membership years ago when my youngest son turned 2, just 2 little kids. I couldn't be in private, and then I stopped. Probably about a 20, probably like a 22, maybe roughly. It's because my short game sucks. It's anybody who doesn't play a long time.
You know how I discovered 3 drives, Blake? That's how I played golf. I would get 2 mulligans, and the third one would count.
Well, wait, hold on. First of all, Joe, you're wrong. He is right because he was sitting in the chat room with me. Stuart, you were in the chat room too, so don't lie. And then and Gautam, no, I'm sorry, Admore and Gautam, you guys are incorrect. So it's the Euro Swiss. I'm long the Euro Swiss here. Why? Because we're getting a bounce in risk. We're at 161% extension, or near 161% extension. Very oversold. Look at the daily RSI.
Wow.
And, yeah. So I picked it up this morning. Let me go ahead.
Looking for the breakdown to be tested.
No, I'd be happy with a bounce back. Like we're back above 107. I'd be happy with a bounce back to 107.50. I'm not sitting here thinking, stocks are going back to all-time highs. I actually think that stocks are going to stay weak, but they're going to bounce maybe today or tomorrow. So I think about a bounce in risk appetite is doable. And plus, I think euro's around a lot of support, and I think the dollar Swiss is breaking higher out of a triangle. And just so you guys know, and this is the benefit of being in our Forex Analytics chat room. By the way, if you guys missed the pricing, it's okay. You can still actually do the premium product, but you can try it for 10 days. It's $1. So this morning in the chat room where I'm usually at for couple 2-3 hours before I even come on here, Chi was we were talking about the Aussie Swiss. He said we were talking about it yesterday, and he said I'm looking to buy the Aussie Swiss. And I'm like, I'm going to keep my eye on it because I kind of like it too, as it's down here near its support. And I asked him, hey, are you doing anything with that this morning? He goes, yeah, I just picked it up at 40. And I was like, you know what? I was keeping an eye on it with them, and then I saw this this is a piercing line formation. Looks much nicer than it did at the moment at that time, because I bought it at 65.50. So I picked it up about 20 pips ago, and I'm like, you know what? I really want to buy the Euro Swiss since it's near support too. It's near the 161% extension. So I picked up the Euro Swiss, the Aussie Swiss off of these support levels, and and I'm thinking that, yeah, we're going to have a bounce in risk appetite. Stocks are going to, the S&P might get back to 3280, 3300. That in essence should take the Swiss pairs, maybe back up like this, something like that. And so, the Aussie Swiss, pretty oversold near the 127% extension might get us back to like, 66 cents from, the 65.70. I think that's all realistic, and it's a little bit of counter move, but, I'm willing to take a little stab at it because, there's like this, these reports this morning that, oh, there's, we're expecting the coronavirus to die down within the next 10 days. But I don't know if I'm necessarily in that camp. It's just the news flow right now seems to be fairly positive, which is aiding, a little bit of risk, a little bit of a risk rally. The Aussie is just very oversold. If you guys are not following the Aussie dollar, I mean, we're right on the, really what I would consider key support zone. It's this low you can see right here from the end of November to the 78% retracement. That's why I drew this little, red support zone. This is a lot of support down here, very oversold, divergent. So I think the Aussie has a chance to bounce, 30, 40 pips. So therefore, I'm going to play a little counter trend move at the moment, but I'm not sticking around long either. What I plan to do is just, hopefully get these in profitable enough positions where I can just move my stops to break even and then, go enjoy the golf
Blake,
course.
are you hearing reading anything about expectations for the Fed tomorrow?
Yeah, no one has many expectations. So what we're going to be looking for really is an adjustment in, possibly their repo facility. So, and just like minor technical adjustments from the money that they're the not QE that they're doing. I think that's going to be rather important. So, but for the most part, I'm not expecting a big move with the Fed. And I always tell people that I'm a very bad Fed watcher, probably the worst there is. So when I say that there's not going to be a move in, based on the Fed, those are typically the days that we get this, we'll have 100 basis move in the euro dollar because, I wasn't expecting it. And so that doesn't mean I won't participate. It's just, I'm really, like I said, I'm probably like the worst Fed watcher in the world. So wrong person to ask. Steve might be the better person to ask when he gets here, as far as expectations from the Fed. But like I said, I'm just playing right now. I'm not really dealing with the dollar too much. However, I do want to play the dollar yen on a gap fill. So if we can get a move back up towards 109.20, 109.30, somewhere up in this neighborhood, maybe the challenge of the underside of this channel, I'm willing to play that. So and let's also make notice with the dollar yen, we didn't go down. We gapped down here on Sunday, and we've been stuck here. So and there's been, and by the way, yesterday I was reading on one of the Bloomberg news things that hit me was that there's been a lot of yen call buying over the last 24 hours. Yeah, it hasn't done anything to the yen. So a lot of people expecting more yen appreciation, which I think is right. I think we're going down here eventually, but I think that a lot of people are getting pretty bullish to yen right now, or has been over the last 24 hours, which I think is now at risk of a move back towards, like I said, 109 and a quarter, maybe 109.50 before it rolls back over again. And so I'm willing to sell rallies. I just don't want to sell it here. And I think a lot of people might have been caught selling it down there over the last 24 hours. And then on top of it, you take like, gold, it's moved today. Gold just filled the gap, right? Or at least pretty dang close. Let's see, Sunday gap coming back in here. So, gold looks like it might head back towards 1550. So if that happens, that should further strengthen the yen. One, you asked me about the Fed. I'm not so much concerned about the Fed this week. You know who I'm concerned about? The Bank of England. And the reason why I'm concerned about the cable and the Bank of England is that, well, first of all, this is Mark Carney's last meeting, but there have been a lot of calls from brokerage firms that are now expecting the Bank of England to cut rates. How about if they don't? How about if they don't? Well, remember, Brexit's happening on Friday, apparently. So I think that the cable is near a lot of support down here, and I'm going to be watching it really closely as we go into Thursday. Thursday is going to be a big day for the cable, so not really dealing with it right now, but I know we're near a lot of support. I actually had a bid in to buy the cable overnight. I lowered it, and it missed my bid by a half a pip, and then it bounced 20 or 30. So when I got up this morning, I'm like, how did it miss my bid? And then I'm like, oh, it literally missed me by, like, my bid was sitting there and it missed me by like a half a pip. And so it rallied, and then now we're back here. But I just lowered my bid because I think we could make a stab below 130. But still, I think that that with the euro at a lot of support, the cable near a lot of support, I wouldn't mind being pre-positioned in the cable like this. Like, let's say it dropped, bounced back, and then on Thursday we're sitting here, like, let's say 130.50, and then let's say the Bank of England doesn't cut rates and they sound a little bit more hawkish, and then then the cable's trading up at 132 again. So I'm trying to get positioned ahead of the Bank of England with a small long somewhere down here, but I haven't dabbled into it yet. So it's something that I'm trying to do. I just haven't done it at all. Anyway, just some food for thought on what I'm. Let me explain one last thing before I bring in Steve. If you guys don't know what I do and how I try to tackle the market, it's pre-positioning myself ahead of an event. So, for example, and the Fed, I don't have much of an opinion, but with the cable, I do. If I can find a strategic entry point based on my bias a couple of days ahead of a key event and get myself positioned, then I'm going to do it. So, for example, I think we did this, a couple of weeks ago. We did it ahead of like some Australian news, and the Aussie got right to where we wanted. And the Aussie news came out, and it worked out exactly the way that I had pre-positioned myself. Same thing here. If we drop in the cable, and let's say we bounce, and then we get to here. So now let's fast forward to Thursday. Why is that not allowing? Is my chart locked? Why is it not letting me move? I can't move. I don't think I have to right click. Lock.
Refresh the page.
Huh?
Good morning, Blake. Just begin by refreshing the page. Something might be stuck.
Let's see if that works. That's weird. It's not typical. All right. Yeah, that's weird. Okay. Thanks, Steve. All right. So let's say, let's just fast forward to Thursday. So let's say and just for argument's sake, let's say it gets down here below 130, bounces, and we get back to 130.50. And here we are Thursday. Okay. Thursday, if I'm positioned at 130 and we're there, okay, now we're here. There, obviously is a risk that Bank of England's going to be dovish. They don't cut rates. They do cut rates, and it just, blasts through 130. Fine. My stops are break even. I get stopped out. If I get lucky, the Bank of England's a little bit more hawkish and they're optimistic about what's happening with Brexit, and they don't cut, cable's trading up here. Now I have a really nice position. So I try to pre-position myself ahead of events if I have a bias, and doesn't always work, obviously, but it gives me that opportunity to already have a position in going into an event that can really move the market. And so that's what I'm trying to do with the cable. May or may not work, but that is my goal. Good morning, Steve. How you doing today?
Good morning, Blake. I'm good.
Good. And just so you guys know, I'll be away from my keyboard for a few hours. I'll be obviously looking at my phone because I'll be managing my positions, but I'll be away from the keyboard for a few hours. But for those of you that are Forex Analytics subscribers, you will still get my analysis this evening. Might be a half an hour late, but you'll still get into about 5 p.m. Eastern, 6 p.m. Eastern. You'll still be getting all my updates on all the basic technical analysis through the majors. But I do want to say that today's daily roundup webinar, Paul Franco, who has hosted it for an extensive period of time, he's going to be hosting it today. So if you guys miss Paul, make sure you run out and listen to the daily roundup today, because he always has a great handle on the market, and we just changed it up with me doing it as of late, but he's going to fill in for me today. So make sure you guys listen in, and remember, if you guys are looking for a brokerage firm, or you're not happy or completely happy with your broker, or you're not getting benefits, it's not like a broker with benefits. It's kind of like friends with benefits, but broker with benefits. You should be getting some sort of,
I
reimbursement.
hope different kind of benefits.
Yeah. Join the reimbursement program so you could be part of Forex Analytics, possibly for free based on your trading. But also, if you're in the United States, you can get a little bit of cashback rebates from Forest Park FX too, or they can hook you up with a brokerage firm that best fits your needs. So you can contact them right here on Skype or on email, and just tell them we sent you. So you guys, Steve, what's happening with you today? What are you thinking?
I'm waiting to see if this is going to be a pause in the sell-off and the general direction we got since Friday. It might be a pause. If we don't have a pause today, I'm expecting that it might happen tomorrow. Exactly what you said. That was what I was writing earlier in the chat room. So yeah, I don't think selling right here, right now, if you haven't had any position, makes much sense. But as you are, I'm looking for interesting levels to to get engaged in several markets. So I think this is the theme of today, and a little bit more cautious than yesterday.
Yeah, like here's just real quick. This is a 30-minute, but I'll do a 15-minute of the S&P. If you guys can't see this real quick, this is an inverted head and shoulder pattern. So if you just think about this real fast. So we got head, right? Oops, crap. Shoulders, right? So I mean, if we get a little bit of a pop here, like this, let's just say we do, which I think is realistic to believe. Okay. This takes us back
coincides with that low over there.
Yeah, it's the 3,300 level, which was really key support. So,
yeah, 61.8 as well.
Yeah. So, I think that this, like a rally back in the S&P towards 3,300, this is a good place to be looking for, shorts. If you want to scale in, you scale in, maybe, you scale in, 3,290, 3,300, you look for little areas, to get short again. If you think that this market's going to roll over. I do. So, I'll be looking at those areas pretty carefully myself.
To be honest, I would consider it, quite a big lack to actually see that big of a retracement. We might, but I think that the market might turn lower before we even reach that. That would be a beautiful level to get to. I mean, ideally, that would be beautiful, close to 3,300. But I'm not sure we're going to make it there, Blake.
Yeah, we may not, and it's it's obviously a lot of it's going to be more news flow. I mean, right now it's great, and then 5 hours from now we could be sitting here, and all of a sudden
we got
durable goods just came out.
Sorry, guys. Durable goods, we got a quite better than expected number for this month, but we got a big revision lower for previous month.
Actually, the durable goods look a little weaker here.
Not what I see in front of me. What are you looking at? Are you looking at the month on month?
Minus transports.
Yeah, core is negative.
Yeah, core is
yeah.
negative, and that's something that market's going to be paying attention to. The headline number is good, but
Yeah, and previous month's release got revised down to minus 3.1. So that was quite a negative number, which became even worse.
All right, well, guys, and good morning, Stelios. I'm going to pass it over to you. I'm going to get to the markets, but thanks everybody for tuning in today, and make sure you stick around with these guys because Dale's got a great interview today, right, Dale?
Yeah, Dale, I think is
away from the keyboard. Okay,
he's away from the keyboard for a minute, but yes, it's going to be very interesting. I'm going to try to listen into the interview as well. Let's see what we have to.
Yeah, I'm here. It's Leo Hermosa, Blake, you know him, and he's got he developed some type of tool for using commitment of traders reports.
Oh, nice. All right. Yeah. Well, good luck, everybody. Have a great one, and I'll catch you.
Have fun, bro.
Yeah. I'll take some pictures. I'll post some pictures
all
right,
on Twitter. All right. See you guys.
All right.
Okay, bro. Bye.
Thanks, Blake.
Hey, Steve, how are you?
Hey, guys.
Good, coach. We have Stelios with us as well.
Cool.
Okay. Yeah. So yes, well, sorry about not being here yesterday. I have both my kids sick, so had my hands full. So right, I mean, Blake very correctly talked about a couple of things. I mean, obviously the main thing still on everybody's minds is what's going to happen with this virus. The market is still, in my opinion, kind of treating it as SARS number 2 or something like that. But the more data we get, the more it seems that this thing is spreading much faster than SARS or anything else. So this is still a big question mark, and I personally think that the markets are quite complacent regarding how big a chance they're giving of this becoming really huge. So Blake correctly said we have the Fed today and the Bank of England on Thursday. The Fed, the interesting thing is that we are pricing, the market always has priced cuts, even when the Fed effectively, a month ago, they said, look, this is it, we're done for now. We're still pricing cut. It's not close, so it's the first full cut is priced by November. So today's Fed, even if there is no change, which is broadly expected for them to not change rates, they could easily say something that brings the cut forward or that eliminates it completely. I think the former is the most probable scenario, because given what's happened in the last month, I don't see why they're going to be hawkish in any way. The data's been mixed, and we obviously have this whole virus situation, which nobody knows how it's going to develop. So I think the risk is for the Fed to be a little bit more dovish, and it's very easy for the market to go, you know what, forget November, let's price it in for,
Remember the 5th of November.
Yes, exactly. So
and at the same time, we have articles like this one, Fed's first hurdle in 2020, dispensing with QE light. Now they're calling it in quotes, and it's saying here that it's a Reuters article. It's free to read, so you can just Google it if you want. And it's saying in essence that you can read this part. Dallas Fed President Robert Kaplan said earlier this month he's aware of concerns the bill purchases may be driving up risky assets.
Really?
And said officials should try to limit growth of the balance sheet. So in essence, they're saying that they will discuss some kind of a tapering or putting a limit to that. At the same time, the usual idiot Neil Kaskari, just a paragraph lower, says that he doesn't understand how swapping, let me see how he mentioned it exactly. Yeah, how swapping one short-term risk-free instrument, which is reserves, for another short-term risk-free instrument, which is T-bill, leads to equity repricing. He's the most clueless as always. So do I believe they're actually going to, put an end? They might discuss the possibility, and the market, if that's the case, will definitely react negatively to that. Do I think they will end up doing it? Personally, no, I don't. And having to do with general market risks that participants seem to be ignoring and be complacent about, as I've talked about since months ago, I think, Stelios, the biggest risk is not this virus. I mean, it can prove to be like a huge factor, but the chances are that it's not. In my opinion, the biggest market threat that the market is complacent about remains the possibility of Sanders, for example, which is skyrocketing in popularity lately, to start polling very close or even higher than Trump, because the market has completely ignored that possibility to have a Democratic president, especially somebody like Bernie Sanders for the next 4 years. And if the market has to start repricing that, I think we're going to see some type of a violent repricing like the one we saw like a couple of months ago in the pound. But of course, it's going to be in the opposite direction, with the dollar and equities. That's what I think.
Yes.
That's what I think is the biggest risk.
I think you're right. The market's been busy trying to figure out what happens if Warren gets.
With China, with Iran,
exactly.
with a virus,
Yeah.
and they're ignoring. I mean, they're not seeing the elephant in the room, right?
Yeah, definitely something that the markets have not been paying too much attention on. Yes. What else did I want to say? Yes. Okay. We have the UK. It's a big week for the UK. Brexit happening on Friday. Woohoo! Finally. And
dream come true.
slowly the uncertainty is going to start going away. Is it going to be good or bad? I don't know, but at least uncertainty is going to start going away.
Finally.
And we have Bank of England on Thursday. Remember, we're still pricing marginally above 50%, 50-60% chance of a cut, which we've said before is not really going to do much for the economy, but it's more of a statement in terms of how the Bank of England is going to be, sitting there waiting to support the economy, blah blah blah. So I think 50-50 is probably the right way to price this.
The market, I think, from a technical perspective, totally agrees with that, because it's not a coincidence that ahead of this, the market has been coiling, right, in what seems to be a triangle. So the fact that this is a symmetrical triangle, I think, also on a technical, from the technical perspective, depicts exactly that the market is torn about what's going to happen. And, one way or another, we get a cut or we don't get a cut, especially if we don't get a cut. I think it's very straightforward. The market is going to explode higher from this triangle, and I think we will find ourselves testing that previous high at 135.15 like in no time. And most probably people in the Bank of England know that as well. Now, are they willing to see the pound move even higher? Well, we're going to find out, I guess.
Yes, exactly. So I've said this before. On Thursday, the pound's going to move either way. So,
there's no question about it.
So people who are taking positions in pound, be aware that Thursday is a huge day.
And I think the potential for upside, if we don't get a cut, is much bigger than the potential for downside. Because if they cut and the language is like, okay, we cut once and, we're going to hold, wait and see, the market might not react that much to the downside. But if they don't cut, no matter what the language is going to be, I think that the market is going to move, significantly higher.
Yes, I agree.
Amelia said that it enters the Bermuda Triangle at the end of this week. Cable.
Oh, yeah. Okay.
Kind of like a Twilight Zone.
Yep.
Right.
It's going to be interesting for sure.
Yeah.
And Steve, I think you're right. And being this close to zero with rates, also, how much further can, let's say they cut, how much further can we go after that? It's not the lower bound is very close. theoretically.
they can just ring the S&P. They can tell them.
Yeah, exactly.
Hey
Anyway,
guys, how low can we go? We are at minus 0.7. It's okay.
yeah. Okay, so yeah, it's going to be a very interesting week for sure. So
Yeah.
let's see what happens.
I keep
Okay.
thinking of how Steve's voice went up when he was talking to Amelia.
Oh my God.
Yes.
Really
You
went up
both-
an octave. I've never heard you talk so high. But
You
anyway,
both are
you
horrible.
must have been
You-
excited.
You
or
almost
something.
sounded like me, man.
Blake said like a fifth grader talking to a girl for the first time.
You're like a bunch of teenagers. When you start a joke, you can't
We're
end it.
teasing you, buddy.
Yeah, I know.
Anyway, you're getting teased on the playground. So,
Indeed.
all right. So, Steve, Stell, huge day yesterday. Are the markets kind of like in shock and they're trying to, you know, find their footing after yesterday? I mean, that was a huge day, and
Having to do with the S&P, it's striving to hold this ascending wedges support as you see here. I personally
okay,
think it's going to fail.
gotcha.
So even if this is a corrective move lower, which we have to approach any type of move lower as corrective initially, of course, because this is a multi-year uptrend. So there is no doubt in that. But
How'd you come up with 3180? I see the number there on your chart, but that was your target you were talking about yesterday.
it's a shorter term
Measured
ascending
move?
wedge. You can see it more clearly here on the 4-hour chart. It is this ascending wedge on the S&P. You see, it's the bottom at 3180.
Okay.
Yeah.
I see. Okay.
And
Thank you.
So far this looks like a bear flag to me, right?
Yeah.
So
Now I know why you don't think it could get up there. All right.
Yeah, I mean, can it get up there? Yeah, it can.
Yeah.
But do I think it's actually going to make it back to 3,300? Not going to be easy. Not unlikely.
Everyone's
but not
hoping it does.
Everybody's hoping it does for a short-term trade. There's no question about it. But personally, I'm doubtful, and that is why yesterday, late in the afternoon European hours, I actually took more than 5% profits on 1/3 of my short platinum position. Yesterday, platinum had a monstrous day down, but I haven't yet closed any of my S&P short because I don't want to reduce my position yet in the S&P. You know what I mean?
Yeah. You're taking all the heat. I would call that, and I've done it myself. You're underwater on a trade. And the minute you have just a little bit of profit, I call that first daylight syndrome. You finally have some daylight, you take it, and then the easy money happens without you after you've taken all the heat.
Yeah, and I don't want that to happen. You know what I mean? Because I held having a specific belief. If I held just to go back in breaking even or making a little bit of profit, which is going to create in retrospect a trade that was very, very wrongly skewed in the risk reward, because if I'm willing to take a very small profit in my short while I was more out of the money,
your risk reward was 1 to 10.
In essence, it's like admitting that I entered the trade that had a very bad risk reward.
1 to 10.
I entered because I thought, and I still think, that this corrective move lower can unfold to be much bigger than what we've seen already. I mean, at the very least, I would expect 3180 to be tested, at the very least, as a minimum.
What's that, about 6% from the high?
I'll tell you immediately. It would be not even 4.5%, actually, 4.6%.
Okay. Yeah, I think we get at least 5%
I mean, come
correction.
on. Yeah,
I know.
It's not even 5%, right?
Right. Realistic.
Absolutely realistic. So that's what I think. And, no matter which index you see, here's the NASDAQ, for example, same deal here. For the NASDAQ, I would expect more or less the same thing. At least a full retracement of the latest ascending wedge, which would imply a move down to 8,660, roughly. I mean, I think they're easily.
And Friday, the day was a key reversal in NASDAQ, the first one the way up, first one.
Yeah, and
Oh, yeah.
and since we're talking about indices, we had a friend
Yeah.
here asking. He said that he was buying one instrument, that depicts the VIX. Anyhow, doesn't matter. And he said that he bought it at 13. Let me find his question. He bought it at 13.3 roughly, and he's asking, what do I think
Nice.
about it? And this is the 4-hour chart of the VIX. I think that's a nice trade, and I think that the VIX at the worst case scenario should retest the broken triangle. We've seen this fractal formation repeating again and again, and at least pushing one more time to the upside towards 25. So I think you have a nice entry there. Your entry is somewhere here. I think you can easily, let's say, put your stop at 12.5 and look for a move towards 25. I mean, not bad, right? Now, I'm not advocating that you should hold your full position to 25. I mean, you can take partial profits when we retest 19 and, then on the way to 25, something like that. So I do like your entry. I do like your position. And I think you're in the right side of the market. So in essence, it's the same thing, more or less like playing short the index on a rebound, or having played it short in your case while it was breaking down, which because you bought the VIX at quite a nice level. So yeah, I think it's a good position to have.
Nice trade.
Yeah, I know, Ronnie, but I made it in VIX terms. We don't need to look at the specific instrument, but yeah,
Yeah.
you get the concept. I added short palladium earlier today, thinking 2000 still likely. Oh yeah, 2000 is absolutely likely. I mean, I made that very clear. You remember, Dale, I know that you remember very well. I said that we can move back to 2000 like it's nobody's business. And look
Yeah.
at yesterday's candle. A
Wow.
6.5% move
Nice
lower in
call.
a single day. And
Back to the
yeah,
throw over.
yeah, and I think 2000 is
To
doable.
be there
No
today.
question. A little bit extreme, but yeah, I mean, we can be there this week. There's no question about it.
Yeah.
So I'm still holding 2/3 of my position. My trade is obviously now risk-free because I took profits yesterday. My cost average is at 2,425. So yesterday I took profits near the lows of the day. And, I'm just now looking for more downside. And I think with monstrous days like the one we had yesterday, expecting a recovery to new heights from here does seem a little bit like an unlikely scenario. So yeah, I expect, I expect that the technical damage already done is going to shake up the market a little bit, and we're going to see more position squaring. And yes, I do think that 2000 is easily doable. Easily doable. Sometimes these type of markets that go completely vertical might surprise you. Even the most optimistic downside targets, might become conservative. So yeah, let's see. I mean, I'm here for a big profit. I entered this trade. I took the risk looking for a big profit. Yesterday, I booked like 5.35% on my first third, and I'm looking for a lot more. So, I'm going to stick with it. Let's see. What do you see in gold? Okay, let's talk about gold and silver and crude since we're here. So, crude, I think the move lower has been clearly impulsive. We see a little bit of a rebound. I think that same deal with crude as we saw with the S&P. I think that probably this rebound is going to be sold off. So I'm expecting something like this in crude. So I'm expecting that 55 is going to be likely tough to break to the upside, and we're going to see more selling interest. Now, having to do with gold and silver, it's not as easy to say what's happening here. Still, the main case scenario is that gold, for example, has broken to the upside, although it found resistance once again at the 61.8% from the all-time highs. Right, you can see it here. But I think that being short is a very dangerous proposition. So, it is what it is. Silver, not as strong, but still likely in a corrective recovery. So I would expect that the path of least resistance remains higher for silver until proven otherwise. So, that's the deal. But, as you very well know, since you're watching, between all of those, I've chosen to take a position in platinum because it offered the best potential reward, and I think I chose wisely in this case. Now, we had also a question. I see potential for measures moving Euro USD in relation to the downward, which indicates 1075 in Euro USD. Yeah, listen, I made it very clear the Euro USD has triggered a head and shoulders formation. I also wrote it during the weekend. And, that implies a move towards 109 to begin with. So to fulfill this target, we would need to move down to 109. And, we take it from there. But, all the way down to 109, I don't see any real reason why not completing the head and shoulders objective, right? So, it is what it is. Now, am I looking to participate in that? Not really. Not really. I mean, I think that the next big move for the Euro USD is going to be to the upside whenever it happens. I think that the downside is going to be rather limited and slow, as it has been for a long period of time, because I believe that in general, the next big move in the dollar index is going to be lower. Now, don't misunderstand me. I'm not implying that the dollar cannot move higher. It can move higher. And in fact, as we were talking about since weeks ago, I said that if the dollar breaks above 97.70, it can continue moving to the upside, even to a fresh multi-year high. So it can. But do I think this is going to be like fast, impulsive? No, I don't. I think that the big windfall is going to be when we finally see a dollar sell-off, but that might happen in 6 months, in 9 months, or whatever. From a technical perspective, there is no reason to be short at the moment. I can tell you that much. Above 97.70, there is no real reason for you to be short broadly the dollar, because there are always opportunities to sell it here or there. For example, I sold it against a NOK and I did very well a couple of weeks ago. But as I've said, I'm going to be very skeptical in shorting it across the board or being long across the board yet, because we don't really have a direction. I mean, both up and down moves in the dollar have been for quite a lot of time slow and choppy. So I think you should be looking for other opportunities. Gap fill also in Euro Swiss. Listen, I got surprised. I didn't see actually that Blake was long the Euro Swiss. But as I was saying yesterday and the day before yesterday, being short down here is a little bit dangerous because you have, you're trading against the S&P, and we know that the S&P's tolerance is rather limited, right? So we've already gone back to roughly levels we haven't seen since 2017, which we saw them briefly. And before that, we saw them in 2015. I have drawn this as a potential descending wedge. So far today, we are seeing an outside white candle. We are very oversold in the daily RSI. We reached 16, 17. So I do see the appeal for a rebound here. Now, I wouldn't be jumping the gun personally. I would be more inclined to wait to see how the day is going to close today, and then see if we're going to get some continuation tomorrow to close above this descending wedge. And if that's the case, then I would feel more comfortable saying, okay, let's say now, completely theoretical, let's say that tomorrow we also have a positive day and we close, let's say, at 1072.60. I would say, okay, now I have a risk. I can, go long, have my risk against Tuesday's low, and aim for, I'm not going to be too optimistic saying, a full retracement of this wedge, but I'm going to be saying aim for a retest of these broken triangles, trend line support as resistance. So as you see, the risk reward ratio is just eyeballing it. I would assume 3-to-1, something like that. So it still makes sense, right? So that's what I would be looking for if you want to trade that. Now Blake is very, very experienced, and he likes to jump the gun because he knows how to handle his positions. If you're not as confident, you might decide to do it like that. Now, speaking of that, if that proves to be the case, so if the Euro Swiss is starting finally some kind of a corrective rally from here, then that would also imply that instead of being short the Euro USD looking for lower levels, it would be much more preferable being long the USD Swiss, because you would expect in that case, if your bias is for Euro USD to continue lower, and you like Euro Swiss to the upside, USD Swiss is a better play to the upside than Euro USD is to the downside, because Swiss is also going to help this pair rebound even further. So in that case, you might want to say, I want to see a higher high. So in essence, I want to see a move, let's say above 97.50. And if that's the case, I'm going to buy it on a breakout from there, put my stop loss there, and in that case, look for at least a move back towards that resistance there. Just eyeballing it, I would say it's close to 2-to-1 risk reward ratio. Why not, right? Nice RSI divergence also there that indicated in advance that something is brewing, some type of rebound is brewing. So, that's also an interesting potential that involves the Swiss franc weakening. Okay. Now, question about Euro-Aussie and Euro-Kiwi. Now, having to do with the Euro-Aussie, let me pull it up. Not really surprised that we saw a sell-off from the highs of the day, because I said yesterday, the day before yesterday, I have no idea when it was, Friday, whatever, that this remains trapped in a range. We tested this confluence of resistances at the top of the range, and so far we're getting rejected. So that was a nice range trade. Shorting when we were testing that resistance, and same deal here. It still offers a decent risk reward opportunity, meaning there are two ways you want to play this. You either believe it's going to remain trapped, in which case you go short and you put your stop loss above the range, or you believe that it's actually going to break out, in which case you might buy this breakout, because this is a rectangle that is being in place since the end of August. And most likely, when we break out from this, we should see, theoretically speaking, an extension equal to the height of this formation, which, coincidentally or not, would imply a move close to the long-term ascending channels trendline resistance. So, those are the two ways you might decide to play this. And having to do with the Euro-Kiwi, Euro-Kiwi still looks more bearish in my eyes. I expected the rejection when we tested this broken triangles trendline support as resistance. It happened initially. Now we're back to retest it, and it might happen again. So as long as we remain below this triangle, I would still, from a technical perspective, favor the downside. Of course, if we move lower from here, that means that the Euro-Aussie should also keep moving lower within that rectangle. So one of the two is going to happen. Either this triangle is going to reject Euro-Kiwi, and at the same time, Euro-Aussie is going to move lower, remaining in the rectangle, or both of them are going to be breaking above the equivalent trend lines, right? In any case, you can play both of them one way or another. Now, if I had to choose to have a position short or long at the moment, I would still go with the short side, right? Let's see. Can you see euro? It's going down to 1.098. Yeah, we analyzed the euro. Martin, I spoke about the crude. About crude, I said that it might rebound close to 55, but I think that the path of least resistance remains lower, especially as long as we trade below 55. So that's my thesis having to do with crude. Let me see. Euro USD 3 drive on the 4 hour. Could Steve cover palladium levels, please? Thanks. Yeah, I did cover palladium. Now, if you want more specifically levels for palladium, let's go to the 4-hour chart, and I can tell you that one area of support is here. I always keep previous formations on the chart. You can see initially this ascending channel, which we overthrew, acted as support. Now we might see this channel's support act again as support now that we've broken down below it. Then the next area of support would be this one for palladium, okay, which is roughly at 2,150. And then below that, we should be looking for a move to my target, which is at 2,000. So these are the levels you should be watching for in palladium. Okay. What do you think of the pound? I think all of us covered the pound. What I said yesterday still applies for the pound, which means above 129, you should be careful in being short the pound. And with that, I think it's time for the interview. Dale, is that right? Is your guest here?
Leo is here.
Okay, great. So let's see what kind of a tool he has to take advantage of the COTs.
Okay. Thank you, Steve. Okay, Leo, welcome back. I'm going to get you set up now. Where are you? There you are.
Hello, can you hear me?
Got you, Leo. How are you, buddy?
I'm doing fine, and you there?
Good. So welcome back.
Oh, thank you. Thank you for inviting me again.
Yeah, so, when you sent me a DM on Twitter and you talked about the COT tool that you developed, I want to give you a chance to demo it and show people that are COT, let's see your car again. COT aficionados, what you've come up with, Leo.
Oh, can you see my screen?
Yeah, we've got it.
Okay.
So it's COT data intelligence, and there's your car.
Yes.
Okay.
Can you see the tool now? I think it's in the right screen now.
Yeah. Right now we're looking at COT data as one of the most undervalued tools available.
Okay.
In the market.
Sorry.
But prior to that, we had the tool up. There you go.
Okay, that's it. Okay. So this tool, the first idea for this tool was to help me with my trading. Okay. So the idea here is to get extreme moves in the big players positioning. See,
that's at the bottom left-hand side.
Yes. So for example, Dale, when I ask people, hey, what do you think if you can look into the big traders portfolio every week? People go crazy. Oh, that's going to be amazing. But I tell people it's possible. We have code data available every Friday. And most of the time what I hear is this. But code data is old news when released. But do you see a trend during only 3 days? A big trending during 2 days, 3 days? Of course not. Retail traders tend to think about their portfolio size, trading micro lots most of the time. But when you are trading big money for a fund, sometimes
they're not day trading.
Yes,
they're not day trading.
sometimes you need weeks, even months to build or to close a position, depends on how big you are. So I really appreciate quote data, and my approach to quote data is to look for extremes. So for example, even funds sometimes run out of money for some reason, because of risk control or because some kind of withdrawals. But even then, they have limits to buy or to sell. So is these moments that I'm looking for. So I'm looking for excess in positioning, excess in open interest. So when you see, let's say, big speculators with a huge position, let me show you something here that will become clear. For example, pound. So you can see here, for example, on August 29, 2019, sorry, that
Yeah.
we have a huge position of players here. They were very short, so like they never were before. So what makes me think that these guys they are ready to take profit. So if we come here to see what happened, so for example, right here, 6 August 2019, we have here was exactly this point right here, when we have this assessing positions, and right after that we saw pound rallying. Okay, so if
So you spotted that based on positioning down there, that small box.
yes, because like I said, the big speculators went they short. At some point, they need to take profit. Okay, so this take profit movement is what makes the trend change, and is exactly what I'm looking for. So if you see, we have the other point of this, that was the opposite, that took place on March of 2018. That was exactly this point here. Okay, so if you're going to see
So go
that
back to your tool. Go back to your tool and show us on your tool.
yes,
Okay, how you spotted it.
right here. So for example, we have this signal here, the possible top, that is a signal based on the one thing I call quotes index. So this was the move that spotted the bottom, the last bottom that I showed. Okay, and right here we have let me just check the date here.
So maybe you could go through, and the different colors are the different groups of traders, right?
Yes.
Okay, well, that'd be important for people to know.
But you have to have in mind that the weak link of this are the big speculators. These guys, they have shallow pockets, while commercials don't have, because commercials most of the time they have some underlying cashing mercadery to trade. Okay, so for example, maybe you see commercials selling pound, but they are selling this because they are some.
It's a hedge.
Yeah, or a hedge, or for example, they are exchanging house, that one client sends pound to another place of the world, so they have to exchange this. Okay, so they are not worried about profits or something like that, just with the hedge or the trade itself. Okay, so I separated another signals, so we can see here. Okay, the logic behind the tool is a little bit complicated, so I made things easy, creating this tab here that is the triggered signal. So every week, every Friday, the tool will analyze all the data posted on CFTC, the code data, and will
Yes.
generate this sign-off for us. I also created an algorithm to mix data. For example, we don't have code data for GBP CHF, but I can create this data using GBP and CHF data, mixing them. Okay, so for example, let me show you something that I prepared for you. So GBP, I showed you these last two nice signals that we got. That was one, the possible top and possible bottom. I also separate one from Euro USD that this signal.
Uh-huh.
The signal took place at an interesting point. If you see, was right before that big drop that we saw. I think 2 years ago on euro. That was in 2018. Okay, so
Okay. From
April
140.
10, yes. So we saw exactly this date here. Okay, so we have based on position, the market, the position telling us that maybe these guys can take profits from here. Okay, why I say maybe? Because we can see more money entering the markets or going out. So maybe the money available 3 years ago are not the same as we have now, but most of the time is the same. Okay, so the buying power or selling power of big funds or big banks, they remain the same. This is what I found to be true. Okay,
Okay.
so let me just reload this.
So are you seeing anything in the euro now?
Uh,
COT wise?
no, I have
Okay.
nothing for the majors, nothing relevant that we can say that it's an interesting signal to see. Okay,
Okay.
the last signal that I have for one a major was for NZD USD that took place 4 weeks ago, 3 weeks ago. I think that was this signal here. Okay, after this, I also closed the positions today. We make 100 pips. That was a good signal. Okay, uh, so we have some. I have something that I want to show because people may tend to think that this is some kind of the thing that cannot fail. But as I told, this is more money can come into the market. For example, we have a very strong and reliable sign for gold on June from last year. Okay, right here telling that we have a possible top in the market. And what happened right before that? That gold broke this zone and went up almost then 1,000 pips. Okay,
Yeah.
and right now for gold we have a very similar scenario where a possible top is we have a valid signal that took place in this candle right here. Okay, based on the positioning. So let me show how I see these things. Okay.
So is this a tool that you provide clients, or are you marketing, leasing it, selling it? Do you educate people how to use it?
Yes. Most of the time, people that are going to use code data, they have some kind of knowledge. Okay, but when they don't know, they are raw to the knowledge. I spend some time with them, making a call and explain the tool, because Dale, I'm going to be honest with you. Most of the people
Why
don't
me?
really. Oh, most of the people.
Don't you ever think that to yourself when people go, I'm going to be honest with you? I go, well, why is it such a special occasion? All right. Anyway, go ahead, bro.
Okay, most of the time people are not interested in the mechanism. Okay,
Yeah,
people
they're
are in
lazy. They just want the money to
the
drop into
signal.
their account.
Yes, they want this. Okay, they want to see. Okay, we have a possible short signal for cocoa and a possible long signal for USD CHF. That this one is a strong signal. That it's the second week that is triggered, and this one is one thing that I like a lot, because we also have also have a positive carry trade. Okay, so we are getting swaps to hold this position. So this is
Yeah,
pretty good.
you're getting
Let me
paid
just
to own it.
yes,
Yes,
that's
okay.
the trades that I like the most. Let me show you gold.
Okay.
Okay, so can you see here these red bars?
Yes.
Yes. So this is the difference between between the position of the big speculators and the position of the commercials. Okay.
Okay.
So when you see excess on this, okay, like this, gold is right now trading in a extreme moment. Okay. So even gold come from 1,500 to 600, and I'm not a buyer of gold because of this. We have a lot of people already bought in gold, big speculators. So the expected move is a downside move, okay? Because
Okay.
they already put a lot of money in this, so they have to take profit. And if you see from where they start to buying it was for 1,200, so they already have a massive profit. Okay,
Right.
so
So the
uh,
red up there looks like the highest readings on the whole chart, and that demonstrates the spread between commercials and large specs that has never been larger.
yes, this is the whole series since Colt is released. See, we are right now at an extreme point. Okay,
Okay.
so if you have a little bit of patience,
Yeah.
this is
So
a good,
positioning's extreme on the long side.
yes, yes.
DSI is a lot of sentiment gauges are also reflecting that.
Yeah, so I really expect a drop from in gold from this point. Okay,
Okay.
so I separated just another signal that the code triggered. We have these nice signals on USD GPI. Okay, we also have this. This one was not a good signal. Okay, but yet we had time to make some profit. Right here, another really good signal. Okay, so if we think on the long run, okay, not on moves, day trading, this is a good tool. Code tool, code,
Okay.
code data is not really good at timing. Okay, so we have, for example, this signal triggered right here on GBP CHF. So maybe we can see a little bit more high before it drops. But most of the time we have the direction very clear. So this can help you to even to day trade. For example, you know that big speculators are building a long position, and suddenly you see a big drop in price. You know that it's a trigger to enter long. It's time to buy the dip. So this gives you confidence to trade better. So
Interesting.
yes,
Okay, and
so
this is part of your service, correct?
yes,
Okay.
yes. So
All right.
this tool right here, people can I make some marketing right
Yeah,
here
go ahead.
now?
Yeah, go
Okay,
ahead. Make some marketing.
So this tool, people can buy it in two ways. Okay, so the first way is using the an automated chat room that I coded. That we have, for example, some trading signals. So all the trades that I make, I post here. We have also alerts for supply and demand zones. So every time the price go into a supply or fail to break a supply or a demand, or even make a pullback or RSI divergence. Okay, we get
What's that?
RSI divergence.
Yeah, what is that?
I think the
I'm
people
kidding
before.
you.
Okay.
What's RSI? Real simple implicator?
Maybe.
Maybe. You could be a diplomat. Okay.
You know that one thing. You know that in 1720, Isaac Newton, he tried to trade. Do you know that? And he lost 20,000 pounds, about 5 million euro today's of gold value.
Who was it? Sir Isaac Newton?
Isaac Newton. Do you remember
the gravity? And he tried to trade and he lost?
Yes.
I never heard that story.
Yes. And
too many apples hit him on the head. He had concussions.
I think he was buying Apple at the wrong moment.
Yeah. What did he trade back then? Tulips?
I have no idea. No idea. But I know that he finished his trading career with one phrase. He told that one can calculate the orbits of the stars, but not the madness of the man. So.
Oh, interesting. Okay.
Yes.
So yeah, that's a good way to rationalize our failures in the market. Is Sir Isaac Newton couldn't do it.
Yes, for sure.
Right, but you know, the tools he had, he didn't even have a good pen. So all right, so that's interesting, Leo. And 40 a month to get this tool or all of your stuff?
Yes, for 40 for a month you get the chat room and also the tool, but you can also buy just the tool. But the best deal is this one for sure.
Okay. How much to buy the tool?
It's 30 USD for a month or 200 a year.
Okay, so it's subscription as well. Okay.
Yes.
Okay.
Okay.
Go ahead.
I think Isaac Newton lost money because he do not have access to this tool. If
they didn't have COT back then.
Yes, for sure.
Yeah.
That's it, my friend. That's
all right.
Well,
Leo, I appreciate you coming. You know what I like about Leo is Leo's a straight shooter. Okay, so he works hard. You could tell that's a lot of work that he puts in, and I hope you have a great 2020 with your new tool and in the markets, Leo, and all the people you work with. The pips just rain down on you guys.
Thank you very much, Dale. If you allow me one last word, I just want to say for all you traders that are already profitable and want to automate some strategy, I can code your strategy for you using a very sophisticated tool to backtest it and walk forward it. So if you need help with that, I can sure provide the assistance you need. Okay? Thank you, Dale.
Leo, a great resource. A great resource, Leo Hermosa. And you can follow him on Twitter at Leo Hermosa. And is that the name and the name of your website? One last time, Leo.
It's leohermoso.com.
Okay, so Leo likes to use his name a lot. So you could find him at leohermosa.com. Thank you very much, my trading warrior brother. Good hunting to you.
You too,
Adios. Bro. Okay, everyone, that's a wrap for Turnaround Tuesday. You're stuck in the mud. We'll see everyone tomorrow. Adios. Oh, yeah. Don't just count your pips, count your blessings. See you, warriors. Thank you, Leo.
Thank you. Bye-bye, my friend.